Forbes India presents India's growth drivers, powered by Barclays Private Clients.
Hello and a very warm welcome to Forbes India presents India Growth Drives, powered by Barclays Private Clients. The real estate sector has weathered many a storm, remaining resilient in the face of countless challenges and pressures. And post-pandemic, it has emerged as one of the key industries with a robust revival hope. To understand this renewed sense of optimism and discuss how medium to long-term projections will translate into action, Forbes India and Barclays are collaborating for Space to Grow, the Real Estate Roundtable. And joining me today, some of the industry experts. May I welcome Mr. Narayan Shroff, Head of Investments, Barclays Private Clients, Mr. Kaushik Desai, Managing Director, WSB Real Estate Partners, Mr. Murali Krishna, Head of Investments and Strategy, Kolte Patil Group, Shridhar Narayan, Group Director and CEO, Infrastructure, Hiranandani Group, and Mr. Krishna, Executive Director, NDR Warehousing. Well, let us start, gentlemen. First of all, I want your personal comments and your personal experiences. Post-pandemic, what were you thinking the industry was going to look like, and did it look the same?
I think if you go back, everybody would perhaps talk about being closest to the real estate that we know, which is home, right? We were homebound. And so we discovered our housing market from a different parlance. And of course, the typical theme was work from home, and that means less on the commercial space and more on the office space. As we see today, wouldn't say that both of them are completely true. Yes, you see a pickup and a demand picking up on the housing side. There is aspirational. There's a demand for more space. You spoke about personal. If you ask me personal, I wish I had soundproofing in the house. But yes, the demand is increasing on the housing. But on the commercial side, the hybrid model is, I think, what is emerging as against what we thought would be a big drag on that. So I think that's what would stand out from my perspective. Also, digital adoption. If you have to make a purchase, it's all about touch and feel and going and experiencing. How do you do that? You had the biggest demand, but you couldn't visit, right? Even the buyers who actually bought it couldn't visit. So that was the other piece. And I think that digital adoption in various formats has come in, but even in the sector, there is a big scope there.
I'll pick your brains on the prop tech question, because what you've been talking about from digital intervention point of view, I see that a lot happening now. And a lot of companies are now trying to up their digital game. So yeah, we're going to come back to that.
So coming back to the pre and post pandemic, if you see on a personal life, you see a lot of changes. Two phases you see: one, work from home totally and more productive, and then coming back into office and work as the pre-pandemic age. But on the real estate sector, if you really see what happens is there have been downturns, there have been doom days when the pandemic has been started. Most of the companies started, hiving off the people. There were a lot of layoffs and all. Suddenly, if you see, the demands has been risen, and the entire ecosystem started working, and all the companies started fully recruitments, the manpower shortage. And you see both phases. One side, people are looking out for jobs, people on the street, and suddenly you see a lot of people getting, there is a lot of demands coming for these people from the industry. Been a good time for all the builders. The builders, most of the real estate developers are doing better than they were on the pre-pandemic time. I'm talking about till date. From today to the next 1 year, we don't know how the industry is going to shape up because a lot of uncertainties and all started coming in. The demand has been exceptionally well. Record sales, record profits.
It's fascinating how one would have thought getting out of pandemic that it'll be slow, but this sector has been truly one that has been promising.
I think what we have seen post-lockdown is a complete V-shaped recovery, especially in the residential sector, which was kind of stagnant for some years. Everybody felt that there is a need for home and an extra room, wherever they are, be it, because everybody is working from home. Especially if you see in Mumbai, I mean, you have 2 BHK, 3 BHK, and then there are 4 computers going on in the room. You have to plan your meetings. You can't do simultaneously. You have to plan one after other and stuff like that. So there was a realization that there is a need for a good house, and that has picked up the demand. Again, coupled with affordability is at all-time high. I mean, as we see today, it's being high in last 3 decades from a residential perspective. If you see the commercial activities, I think ultimately it's a commercial activity which has to come back. So if you see overall as an industry, it has come back pretty strongly, especially in India. At least it's growing at 6.5 to 7% Indian GDP. If you see the tax collection, $350 billion 2021-22 tax collection, it's being, it's kind of outperformed any target that you would have thought so. We'll come back on the prop tech side, but I would say how the developers have adopted, all the technology for selling, for marketing, for reviewing, how the sales mechanism have happened. I think it's evolved. I mean, we say need is mother of all invention, and that's what we've seen in the real estate sector as well during pandemics when everything was standstill.
Warehousing. What were you thinking getting out of the pandemic while you were in pandemic? Because that's a niche business. And so what was the sentiment and what did it translate into for you?
Some of the learnings are the resilience of both humans and corporates collectively, both individual and collective response to the whole thing. And as far as warehousing goes, we were working because essential goods are stored in warehouses and trucks have to move. And we grew the most during the pandemic. One of the key things was, as Narayan, everyone mentioned, people ordered from homes. So a few things happened. People adapted to new behavior and they started using their mobile phone. They started using their computers to order things online. And the e-com boom started then. So you had a huge investment coming in. Now, we built close to about 2.5 to 3 million square feet of warehouse during the COVID period. How did we do it? It was tough because we had issues in terms of getting the right labor, getting the material and all that. But somehow we did it. So, I mean, that was one phase. Now, what is happening now? What has changed so far? One is clients are always as demanding. They want a project done at the minimum possible time, with the same quality. And, though asset values have moved up, rentals haven't moved up. So it's a question of matching, optimizing everything. We're very positive about warehousing, about the industry per se. At the same time, we are watchful what we do because there is uncertainty in the market. And this is where we are. Yeah.
Wonderful. Mr. Narayan?
On the real estate side, there is a concern that people did realize that they had to change their ways. Companies thought differently, ITs. We have got large clients like TCS. People started putting more investment into tech and then making people work from remote locations. So in one way it was good. Regional imbalances got a little bit ironed out when people could now move into Bombay to find work and sit in plush commercial offices, started sitting back in towns and started working back from there. And we can still see some of the impacts, lag effect still on the sector, especially the commercial real estate office assets. That's what happened. And there was a huge amount of resilience. Someone mentioned people helping out. I must have got some 100 calls to get people out there. So it really, I think amongst various countries that I saw could face and deal with such a pandemic, I think India did the best. Post-COVID, I think digitization continues to remain. Not only remain, it is enhanced. So, you see huge demand in different class of assets. Residential density plays a huge role. So somebody mentioned here, talked about people wanting one BHK moving to 1.5 BHK, people wanting 2 BHK wanting to move to 2.5 BHK. So we can practically see, earlier it was all about affordable housing, small sizing, even if it's a luxury segment, but we could see now, it's now something called the affordable luxury. Right. You can afford that luxury because there is a need for it. So we could see that kind of a demand kept coming up in the residential side. On the commercial side, we still are grappling with redundancies and occupancy rates. People are now close to, vacancies are still 8 and 10% in grade A commercial assets. But that's not because now the COVID
this would be there. I think it's more because in terms of you give it till 2 or 3 more quarters, I think people would need to come back. It's also about cultural shifts in your mind. People have to unlearn and then learn back, and you can't do everything out of home. So I think the commercial office space will start taking up growth, and residential is taking up growth. Warehousing is doing extremely well. Logistics, warehousing, and industrial build to suit. And the more important thing is the pent-up demand of COVID, post-COVID. You can really see the surge, but most of the surge is towards your FMCG, IT, equipment, and those kind of stuff.
Connected to your comments is my second question, which is how we saw post-pandemic and during pandemic, a lot of business moved to tier 2, tier 3 and tier 4 cities. So I would want to first get into the residential aspect of it, and then perhaps we look at the commercial aspect of it. Suddenly, a lot of people went back to homes. There was an exodus, Mr. Murali. And what change did you see in people's behavior and buying capabilities and wanting to settle perhaps in smaller towns? And there was one more thing, if I may add, this whole under construction versus constructed apartments, So now are people still confident about investing in under construction buildings, or are they wanting?
I'll come back to
yes.
you. So when the pandemic started, let's say in 2020, and if you see for the 6 months, the people started migrating from the towns and getting into tier 2, tier 3 cities. But still you have to understand there is a lot of constraints in the tier 2, tier 3 cities, because there is no organized builders, there is no enough supplies, and there is, even though the infrastructure, when you say the basic infrastructure is still yet to build. So from that side, when you move to 2021, most of these people have started coming back into the cities like Pune, Bangalore, Bombay, all these cities, and then suddenly the demands has started rising up in the cities. So that's there would, for all the residential builders, there is a phase of about 6 to 7 months where the sales has been hit and all those things, and suddenly then started the sales moving up. And of course, there was government measures like the stamp duty waiver, etc. has helped. But if you see the residential demand before the pandemic, in India, average about 2.5 between the 5-6 major cities, 2.5 lakh houses get sold. Today also we are around the same. So this demand going to continue.
When we talk about warehousing, when we talk about the commercial infrastructure, etc., what were the trends you saw in tier 2, tier 3, tier 4 cities?
Let's go back a bit. See, warehousing, if I look at some macro factors, warehousing or the infra logistics is dependent on, I would say, at best 2-3 factors. One is the government policies. Second is the infrastructure, what is available and what is likely to be built. And third is the quality of labor and the availability of labor. If you look at the policies have been extremely favorable towards warehousing ever since the general taxation rule came about, the GST. That was a game changer. And second is in terms of infrastructure, I think the government has done a fantastic job. Pre-COVID, they were building about 20 to 24 kilometers every day. Today, it's about 35 to 36 kilometers of highway on a daily basis is what they build. Next is availability of labor and quality of labor. That poses to be a challenge because the labor, as Shridhar mentioned, we're still a production consumption center. And warehouses are built around consumption areas, right? And the bulk of the consumption is happening in these cities. So I would like to go where my clients want me. Because unlike anything else, because when you build a warehouse, you lease it on a per square foot basis. Irrespective of whether they put 100 cartons or 100,000 cartons, it's on a per square foot basis. And they want to be closer to the consumption areas, right? But slowly what's happening is, as people's disposable income goes up, as these cities come up, you see demand coming from there. I see these tier 2 cities and tier 3 cities, I see a slow development. I don't see them really ramping up, but I see a gradual development, which I think is good because it allows me that leeway and it also prevents me from going and investing upfront. I gauge the demand. But yes, cities are growing, and with increasing infrastructure development, I think these cities will play a role.
All right, before I go into what needs to be done to support this kind of growth in these smaller cities, return to office. Would one of you want to weigh in on with return to office? We're still seeing a lot of hybrid movement and, a hybrid
I'm a big supporter of going back to office. I started it early.
I'm a big supporter too because I usually find myself working extra hours when I'm home and working from home. There's no work-life balance
Absolutely. My point is culturally, and it also because your touch and feel in the office, your ideation, your conference room talk, your talk by the coffee machine and everything else, or you want to weigh in everyone's idea while doing it, especially in this sector. I'm sure you look at a plan, you want to find out amenities.
Sector to sector, it depends. I think BFSI.
I think ITITS, BFSI can manage.
If you
I
see
think
Bombay,
broking,
your,
insurance, financial
60%
services.
occupancy is there. If you see Bangalore, it's still 30-40%.
Still, there is a huge shift happened in the commercial space. If you see, the huge demand come from the co-working spaces. The flex offices has been a demand. The managed offices has been demand. Earlier, they used to have all these companies used to take large, like the coast companies would take a lakh square feet. Now go for a 20,000 square feet managed office or a flexi workspace.
Not seeing too much of, and people don't know commit to large offices because they anyway have co-working offices. So they will obviously commit less.
That's been a big shift.
Second and the third and the fourth office, like you would have your central corporate office.
But I think the core demand and the core, this is still stable, my view. That commercial office assets, the Brookfields and the Blackstones, the largest office owners in the world are still investing money and taking up commercial office space. I think it's not only India specific. I think it's very, US took something like 20-25 years for people to come to a work to home culture to the extent of 25%. In India, just because of COVID of 2 years, people can't expect that we'll also reach the 20. I think there will be a 5 to 10% of working from home, etc. And as you rightly mentioned, it could be BFSI, services sector, insurance, and where you can afford to work from locations. So insurance survey, financial services, broking, digital, KYC. And also there is a huge amount of digital transformation happening where you are converting a physical work through so like for example, I was reviewing a startup which was doing printing of 3D printing of houses. Actually, you bring the mobility back to where we build with pre-engineered blocks and close it in 24 days. People have built villas and I've been, but then that also failed. Katera is also boomed like we work. So, a lot of things have happened.
Two more things to add in terms of, commercial spaces. One is that, be coming to that hybrid model, right? So effectively, you can't just let go of that seat. It's flexi, but you can't let go of that seat. So that's what we observe. The second is that the fact that you need BCP, right? Business continuity plan. We were talking about COVID earlier. I think pretty much that insurance, everybody, banked that insurance, right? Wherever you had that and where you did not, they are all planning that. So you need to have a remote site and a parallel site.
Will demand for office leasing see incremental growth?
See, the vacancy rates has been, if you see, in for example, in Pune where we own a couple of assets, if you see it's about 10-11% will be the vacancy rate. I've not seen it.
2-3%. Vacancies have
gone up. The vacancy has gone up, but I've seen a huge demand coming up.
Right.
Because for a market like, let's say, Pune, the supply has been always oversupplied market.
Anything
residential but the demand for co-working, especially the flex offices or the co-working spaces, these demands are coming up.
All right.
There are a lot of enquiries coming up on large operators where they need huge blocks to, I don't want to mention the names, but huge blocks where they wanted to lease out for, but the model has changed. Right. Earlier used to have this fixed rental, now they are all talking about revenue share model.
I want to come back to Mr. Desai to you and Mr. Iyer to you on the warehousing opportunities and the data, the data centers, etc. We are looking at investment come from that side. So if we are wanting to expand those markets, what kind of support infrastructure do you foresee changing the game?
So warehousing is pretty much flat because I can build on 50% of the FSI, right? Because, and even if I go multi-level, clients don't want it because they waste time bringing the goods down and all that. So that's one part. So as far as data center goes, a few things count. One is the lag should not be there, right? The latency, right? Second is, whatever it is. I mean, people say that I don't care whether it is, but everybody wants it in Mumbai. For the only reason that the submarine cable lands in Mumbai, it lands in Kochi, it lands in Chennai. Okay. You have another cable, I won't call it a main cable, another cable which is going from, hasn't been operational as yet. It's between India and Sri Lanka. And from there it goes to Maldives, and from there it goes to Africa. That is from Tuticorin. So these are the points, right? So bulk of the data centers are either in these places or they're on the Golden Quadrilateral on the, Chennai-Kolkata highway, because the entire thing is fiber cable. It's an amazing thing the government has done. They've put in more fiber cables than water pipes. So you might struggle with water in Bangalore, but you want to put up a data center in anywhere in India, you have proximity to fiber cables, right? As far as data center goes, you can go vertical. That's what people do. And there's a lot of restrictions compared to warehousing in terms of from the buyer, from the user, right? One is, it has to be on a non-flooded area. So all these things you can use up. But a few things that happens from a yield perspective. See, what are we? Whether you're in the data center business, you're in the commercial real estate business, everybody is in the yield business, right? In a warehouse, I let it to a client. I allow a month, 2 months for a fit out. Or if they built a suit, I just finish it off and give it to them. I start collecting rent immediately. What happens in a data center is the client starts paying based on the number of racks or servers they put in. And they test it out. They start with one rack, they go to the second rack, third rack, they build it slowly. So are you willing to wait it out? That's one. Okay. Second, because yields don't come in immediately. Second is, who's the user? The chap who's sitting in the US, it could be a Netflix or a Spotify, if they want to be in India. They want to deal with the owner. They don't want to deal with the third party, right? But having said that, I see a lot of demand for data centers because I think we can build the infrastructure. And I see a lot of demand from within India. I see large investments happening. And in fact, one of the very first Tier 4 data center outside of Japan and Asia was in India. It was built in Amravati, Vijayawada. I've been to it, I've seen it, it's out of the world. So we have the capabilities, we have the infrastructure. I see a large investment happening over here. It's happening now, and I see a lot more happening in this year.
Well, I agree with him that a lot of demand, obviously offshore demand, but a lot of in-house demand, because there is a clear directional shift from the government to keep data in-house for India, and hence
the data localization laws.
Data localization.
It's mandatory now for you to store
So
data.
obviously that asset class is going to grow. There are challenges whether you are investing through operating company or a property company, whether OpCo play or PropCo play. I think that's...
In fact, Kaushik, it is more of a power play.
It's an infrastructure.
Yeah.
Right? And
It's
power. It's
Yeah.
because that's the reason why you measure it in megawatts.
So you want
right?
it, yeah.
We have built the largest scale 5 data center in Panvel. Okay. So number one. Number two, data center is a power play. It's about megawatts. So my Panvel data center is around 45 megawatts. We're doing one more 45 megawatts. That'll be the largest in India. 45 megawatts, yeah. So we have finished 2 floors with 1,200 racks each. So that's around, each building is 7,200 racks. And data center is power because not only the racks get heated up, you need a lot of power to cool. So the cooling. So you need 2 or 3 alternate sources of energy, 2 or 3 fibers running. And obviously closer to the submarine link, which is IIT Powai, the link runs Bombay, Chennai, and Kochi. So people generally like to cluster them there, but you can lease lines.
Mr. Shroff, I wanted to speak to you about the real estate investment piece, and we are seeing volatile stock markets. Is it going to drive investors, net worth investors back into investing
Glad that you asked. That's a debate that as an asset allocator we do it day in, day out, right? But then, see, I think the key is that volatility is not the same as the more medium to long-term view. Yes, if the investors believe, general investor community believes that in the medium to long term you're going to have equity downturn, which is not our base case, which is not the market's base case as we stand today, right? It's volatility. I don't think that's going to be the trigger. What is a trigger is inflation, right? Which is the newfound game globally, right? So the sector has proven to be real assets in sense is an inflation hedge. And therefore it preserves and grows value over a period of time. So yes, it is a diversifier. And our clients, right from ultra high net worth to high net worth clients, are all looking at it more seriously. If you look at the flip side of it, is also that inflation as a sector is going to hit the margins, right? I mean, either it hits the margins, steel prices, cement prices, all of them are going up. So either it hits the margins or you pass on the price, which is going to come back and hit the affordability. Add to that the interest rates going up, right? So then, but then, I mean, people talk about interest rates and EMIs, but the real decision, at least in the housing segment, I'm sure, it is not the EMI, it is the down payment. So the price increases impacts the decision making. I don't think the real end users take a decision just because the interest rates have temporarily moved their EMI, right? Because those are variable. So, I mean, that is an interplay between inflation, but we discussed quite a bit in terms of the pent-up demand and the sustainable demand, that way. From a global investment community perspective, when we have a conversation, who are we competing with for those dollars, right? We're competing with the US market, US housing market. We all know that story. And then we are talking about, let's say, the China housing market. But if you ask me as a sector and why we believe, all the sectors that we have representatives out here is actually we're seeing some structural paradigm shift. And, it's not very long back for people, all of us who've seen that just a few years back. I mean, I would use the word we often use in equity markets called quality, right? Think about the sub-segments. Each of the segments that we are talking about, we used to deal with cash, we used to deal with unorganized sectors, contractors, and, we spoke about, the Diwali to the next Diwali to the next Diwali. We have come back a long way in terms of whether it is governance, whether it is credibility of the entire structure, transparency, that has come into play. I mean, that is attracting investments and will attract investments. If you look at from a developer perspective, any of the sectors, it basically increases your investor base and demand base, right?
Absolutely.
And from a investor perspective, and it also, by the way, brings down the cost and availability of capital. I mean, earlier we used to have these conversations with high net worth investors, global investors. There was always that extraordinary risk premium attached to the segment, which is no longer there. We're competing, as a financial institution, we're competing to get into the sector, including some of the infrastructure logistics sector. And then from an investor perspective, this increases the number of asset class available, or rather sub-asset class. Investment base has increased significantly. We only used to stop at resi for ultra high net worth commercial. Now we're moving to 5 different subsectors and REITs and InvITs, right?
We talk about residential
financing. I'm sure Kaushik, you guys do financing. I mean, I'm sure that
you do MES plus. So obviously, you're taking risk plus. You're taking an equity kicker. Am I right?
Correct.
We do senior secured as well. So
Senior secured as well.
right. So it's so from that perspective, I think you look at the project cycle and how the project is getting completed or financial closure of the project is achieved. So from that perspective, if we are talking about residential, there are 2 segments, right? One is affordable and mid segment, which is kind of driven by end user demand and not by the customers are not investors. They are actually the end user who are going to use it. And because of the tactical shift in income, mostly if you say driven by the IT sector, some of the pharma sector, industrial growth, I think this is the latent demand that they are having. This is a kind of first-time home user or first-time home buyers who are getting that benefit on home loans as well. So these are the guys who are buying these apartments.
Now with interest rates going up, will it dampen the residential demand?
I would say it dampens the sentiment, but not actual buying in our view.
Time for some closing comments now, but I do want to take the question on PropTech that we've been discussing to talk about. How fascinating is the digital landscape in your industries and line of work, and what is exciting you, and of course, your closing comments for the day.
Yeah, so, on the PropTech side, I would just say that it is like any other sector. You're trying to solve for efficiency. The only thing that comes to mind is that it's one of the sectors with the largest asset base. So effectively, a proportion of technology spend could be small, and the impact on the profitability could be really high. Second part is, like I said earlier, has been traditionally very, very unorganized. So there is a lot of scope in terms of bringing in those efficiencies. The third part is, of course, sales. So sales, whether it is in terms of the solutions like fractional ownership or increasing the base, but that's where. So there are several ways. And then lastly, we discussed about remote. How do you get that touch and feel? So VR, AR technologies and all of that. There's a lot of scope, is what I would say, coming from where it is and with the large asset base. In terms of, just to close on, summarize on my thoughts, I would just repeat that. I think one of the biggest paradigm shift which has happened across the sectors within real estate is the quality. And that would make a difference in terms of the investor interest. From our investors' perspective, it is changing quite a bit. For example, one of the areas that we discuss quite a bit in different formats is asset ownership and leasing. So we've spoken enough about technology startups, asset-light businesses. VCs like it, high growth, but that means ownership premium for owning assets is increasing, and there is a lot of use cases there. And the third is that the presence of big boys and girls in the industry, and that's ushering in a lot of solutions, a lot of transparency into the play.
PropTech be a very interesting space. We are just anchoring the PropTech fund, which just got SEBI node to move ahead. So starting from a big data analytics, we can use a predictive analysis for, deciding a space, what the customer demands is on a specific location, to a sales strategy, to a BIM, where we can modeling the entire building infrastructure, modeling to sales, to a lot of startups are coming. I've recently came across a SaaS platform in real estate where you can do the entire project monitoring sitting in an office at an accuracy of about a centimeter level, where there and even there is the consumption of material to what level it is. Everything can be monitored, which can be changed. So PropTech been very interesting, because traditionally for a developer, the technology is only a SAP platform and a Salesforce, which is moving from that moving into a sales platform, a lead management software. It can be a client management software, a loyalty management software on a commercial space, especially the facility management. I mean, there are a lot of startups comes up in the facility management. The technology is, so real estate being always a traditional business, but if you see in the last 2-3 years or post-pandemic, I would say, technology has started playing a big role onto the real estate.
Narayan and Murali has covered a bit on digital. I think there is a lot of scope for improvement here as well. I think as we've seen digitization in property market or in residential or commercial real estate. I think the next wave we are going to see some AI which is going to take place in this space, and with regard to information as well, as Narayan pointed out, transparency in the sector. With AI technology and all, there will be a lot of information available. You can slice and dice the way meaningful information for us. So I think that's going to play a very important role, and there is huge scope for it. I think sum it up, I think we are at the start of this positive cycle in the real estate. Obviously, there are positive macros as well. Like as I said, affordability is at all-time high. Per capita income is increasing, and once it reaches certain mass, I think it's kind of just take a J curve and the China comparison and stuff like that. I think that's going to play out in the Indian market. So I think it's a good time for real estate. Next decade, I'm very optimistic about it.
We use drones. So we monitor projects. We tell clients we take we monitor projects through drones. We don't do it in Goa because that's a government notified zone airport, and because in certain places, wherever we can, we use drones. That's something we do. and I think they've covered. And I just want to touch on one thing, which I think it's very essential going forward. Yes, macro thing, you have for the next 12 months, one has to be cautious, but long term, we are very positive. But one of the things we became more conscious of is the ESG perspective. We always had the S and the G aspect. The governance aspect, you're forced to be a good boy or a girl because the government penalizes you, the society penalizes you. So the G feeds on the S and the S. So E, the environmental thing, is something we're talking about it very, very seriously. We plan to go solar on almost all our warehouses. We are careful about how we consume water, how we consume electricity. So these are my thoughts.
I think prop tech, you also need to take it beyond your clients or the commercial and the sales part of it. I think there is a lot of value engineering. There is innovation, and which is like, I was just telling them about 3D printing, PEB. So you can actually reduce the time span of building a building, whether it's a commercial or residential. Obviously, you have restrictions in terms of the height that you can go to. Right now, we are confident for ISA specifications of G+1, G+2. So, which can withstand. I think there is a lot of innovation in technology for building, apart from the BIM system that you use, design elements and crashing of times. These technologies also play a huge role. So, I think prop tech, apart from these, from the traditional SAP and CRM systems that you have, now more AI, etc., show flats, all of those are there. But they are playing a large role in terms of even building your metros, your bridges, your overheads, your houses. So, I think prop tech is a great initiator for innovation and technology to impact this sector. Coming back to my closing comments, I would say real estate and infrastructure is a big sector in terms of drawing investments into the country, number one. They are the largest providers of employment. And the next 10 years, based on what we have done in terms of India as a country and within the Southeast Asian economies, I see a huge blip. The blip is temporary because of COVID and currently the interest rates. But I see a huge growth potential, and the window is the next 10 years, I would put it that way, because all of this you will see a lot of action coming, and add that to the credibility in terms of we are no more that emerging developing economy. We have proved ourselves to be the right place to invest. You have got an arbitrage opportunity, you have got asset ownership is taking place, you are creating an yield asset, you are being able to compete with global companies. So India is the place to be in terms of different sectors. And digitization, if you see, even in the startup and the VC ecosystem, you see bulk of the technology across sectors in the globe comes from India.
That's a very high note to draw ourselves to a conclusion. Thank you so much, gentlemen, for all those wonderful insights and taking out time to be part of this roundtable on real estate. Thank you so much.
Thank you.
Forbes India presents India's growth drivers, powered by Barclays Private Clients.